all. This is Market Explainer. My name is Danny. I am joined always by the junior co-host, this guy, my good friend, the big man. We are America's #1 business news podcast.
Yes, sir.
We are far more important than the people over at Group Chat Podcast. I always like to say that because people don't know.
Sure.
Of course. So, as always, what we do here on this show is we break down 4 stories and we curate these stories. I usually do it. This is the first time in however many weeks, 40 plus weeks, nearly a year of doing the show, where I reached out to the big man with, like in a slight wave of sadness. And I said, I got nothing.
Well, look, regardless of what Danny says, he needs help constantly, and
That's not true.
I'm here for him when he needs that help, and I try to do the right thing, unlike Danny that's constantly saying he does everything, he does nothing. So I threw him a bone this week of, let me help you even more than I normally do.
Right. And then, he proceeded to text me 53 garbage stories that I couldn't do anything with.
Let me help you with the one job you actually do. And
I had to sift through all of those terrible stories, and I had to mine for gold, and that's what we did.
What can I say? I find a lot of things interesting. I'm a very eclectic knowledge person versus Danny.
Right. Eclectic is a word, not the one I would use.
What are we doing today, Danny? What are we doing?
Well, we're going to talk about a few stories, but before we do that, I want to tell everybody about our Patreon. You can go to patreon.com/Market Explainer, and you can join one of our tiers, and we're going to be throwing up some new shows, some different content, a lot of it in the vein of what we do here at Market Explainer, some of it in the vein of how we started making content together, which is movie reviews. We're going to do 1 or 2 of those.
Sweet.
So, it's just a place for us, doing it on Patreon versus doing it on our traditional channels gives us a little more flexibility, a little more opportunity, because the minute we start posting things with copywritten content where everyone's going to start having a conniption, we can say certain words. We can't say Dos Equis on ours. So, we've done a couple of those episodes here and there as a test. We like them. And now we have a place for those to live. That's over on patreon.com/Market Explainer.
You can also get there from marketexplainer.com, which includes all of our episodes, our Patreon, links to everything that you need at marketexplainer.com.
That's right. And we also have links to all of our sponsors, many of which I own. So. How many does the big man own, you ask? 1. So... So listen,
go ahead, Danny.
Occasionally I like to talk about the stock market. I had been out of the market as an investor for some time. Just this morning, jumped back in. So there's going to be a huge rush of IPOs coming this fall, and I just want to point out before everybody goes public that this has never failed before, right?
Okay, all right. Don't start with your crap. Don't start with your negative Nancy.
I'm not
the
being
whole
negative
world's
Nancy.
going to explode.
No, that's not what
Everything's going to crash. Everything.
Okay. One of the expected IPOs, I don't know if it's covered in this article, I can't remember, but one of them is our good friends over at Rivian. I know they're trying to go public this fall and in the spring. And I say good friends, we hang out all the time. I'm on their board.
No.
Well, I identify as being on their board.
Let's back up for a second. Let's tell everybody what the actual story is. The story is already in this year, it's been one of the busiest years for both IPOs and SPACs, in history. If that trajectory continues for the rest of the year, which they believe it will become the highest IPO SPAC year in history. What Danny was alluding to in that this has never happened before and it can't fail is the last time that we got even close to these numbers, the second highest or currently the highest was the .com
2000.
In 2000, the .com, what we now call the .com bubble, right?
Yeah.
The dot-com burst. So that's what he's referring to. So that's really the story we're talking about here. But I don't look. This is different than it was in 2000. And let me explain to you why before we get into some of these. Like he brings up Rivian and stuff like that.
Right.
Most of the companies, not all, but most of the companies back in 2000, the dot-com eras, these were companies that did nothing for no one. At the best, they were software companies that were supposed to build a product for someone else that was eventually going to solve a problem, right? And everybody was making so much money as investors that the common person jumped into the market thinking, I can throw money at anything and it's going to make me rich. It's going to make me a return. So they ended up investing in things that led to nothing. So the only people that made money were the people that owned those companies that initially offered those, right? And then they maintained being rich while the investors got nothing when the bubble burst.
Yeah, so to quote Dave Portnoy, "Oh, Prez, stocks only go up, baby." That's not true. They come down
not
sometimes.
True.
I think we've seen unprecedented market liquidity from the Federal Reserve, which sometimes contributes to that feeling of everything going up in price. It's also called inflation.
Well,
by some people,
but
some
here's
economists.
what's different now. These companies that have gone IPO this year, these companies that have gone SPACs this year, by and large, not all. We've talked about several of them on this podcast. That
Correct.
But by and large, are companies that offer a product. These companies have been around for a couple of years, or they've done something specific that a lot of them make money. And here's what's a little different in this year, and this is part of this story. This year, even though we've had so many IPOs and they're making money, what I consider a flag I guess it would be a green flag, not a red flag to me, is most of your IPOs this year have actually underperformed. Meaning that they have closed the first day or within that first week at less than they initially went IPO.
Right, which you would think that would be a signal to people trying to go public, be a SPAC or IPO. It would be a signal to them to have some pause. But the reason that I think a lot of these, in the article, let's just talk about a couple of these names here, right?
Mm-hmm.
Warby Parker,
right?
Fresh Market, I'm unfamiliar with them. Authentic Brands, I know they are. Nautica, Eddie Bauer, that kind of thing.
Yeah.
Allbirds, right? These are just a few of the companies. Instacart, Sweet
You know
Green.
who Instacart is.
Of
Everybody
course.
knows Chobani, whatever it is for Greek yogurt.
Fantastic
You've
yogurt.
seen it in your community.
Impossible Foods.
Right,
So-
which everybody knows from the Impossible Burger, right?
Yes. So-
what is it? Burger King,
The
right? The Impossible
Whopper.
Burger and stuff like that.
Yeah.
So most of these are actually pretty big names. That's what I'm talking about.
Right.
These are
and so-
actual companies.
Right. And so if you look at them, though, most of these, if not all of them, have another common thread, and that is Silicon Valley venture capital, right?
Sure.
So a lot of these companies they have huge investment from, I don't know but I can just throw out some names and probably be correct. Andreessen Horowitz, Sequoia. I don't think that, Masayoshi Son is anywhere on here. But I'm just saying that if you look, it's billionaires playing with money from exits that from companies from the 90s, from the last boom. Okay, this is so the connection I'm trying to draw here is a lot of these venture capital funds made their bones going public in 2000 with companies that they boomed
that's
out.
how they get their money back, right?
That's
I
how
give
they get their
venture
money back.
capital to these companies, they go IPO, I get all of my money back, right?
Plus
and
them,
give it to
plus
the
them.
next and give
But
it to
came
the
back
next
with
person
friends.
and whatever. But you've got companies like Stripe, like online payment processing, right?
Which I use.
I mean, again, that's my point. Is you've got companies that are actual companies going on the market versus 2000, right? Now you're talking about, like, if you really look at these numbers. I mean, how many days are in a year? 365, right?
Something like that.
365 days in a year. If we keep on track, just the ones that we know about, you're talking about 375 IPOs alone this year.
Coming in the fall or this year total?
No. That would, if everything that we already, people that have already filed for an IPO, right? Whatever. The estimation is 375 total in 2021. That's more than one a day of the calendar year. When you break that down into actual stock market trading days, it comes out to like 2 a day, which is insane, right?
Which is
that many companies would be.
And I think what we were both alluding to, but not saying, and this isn't a political statement, but this is a method for the initial investors to liquidate their positions, to make good on their investments, sometimes to the chagrin of Main Street, right? Sometimes to the detriment of Main Street. Now, that being said, I know a handful of day traders who are all retired guys, actually, who are doing great, right? This market has been treating them very well. And they're looking at some of these IPOs saying, hey, I'm going to pick up a couple of points here when Warby Parker goes public, right?
Right.
So,
well, you've seen this trend. We said earlier that a lot of IPOs were trading downward day one. Again, by I'm the resident stock guy. You know what I mean? Between Danny and I, and we talk about this, or I've talked about it a lot on this podcast, that these valuations, and Danny and I have talked about these valuations, are insane, right? And people are picking up these initial stock offerings, and then your knowledge investors start flooding in at rates that are more reasonable to what the company is supposed to, and it drags that price down. Right. Because they can't sell it for the inflated price after the initial, and it drags that first day, that first week, that first month down to a more realistic, valuation. And your initial investors see that. Now, long term is different, right? But your initial investors see that, and what it's done, just like the housing market, when you have things for selling less than what you want to sell it for, it drags down the whole market. So what you've seen here recently is IPOs have more realistic valuations, which means their first day, their first week, their first month looks better because they were more realistic with that initial day offering, right? And if that trend continues, then those day traders will make that point quicker, right? Where I know a lot of day traders that are staying away from initial IPOs. They're in 2 or 3 or 4 days because of that drawback, and they know, give it a month, give it or whatever, it's going to go back up to that. They're going to gain that point. They're going to gain that whatever, but they want that initial pullback because that's been the trend this year.
Yeah, and to just to get back to the one thing I was saying, Rivian expects to go public probably in 2022, not this year. And they're going at they're trying to go at an $80 billion value, and that's what happens when you take billions of dollars. From Amazon and Ford and other companies. I just want to harp on this for 1 second. I just want to complain. Can I just complain?
Absolutely. Go ahead.
You haven't built anything. I can't go anywhere and buy a Rivian truck. Okay? What?
Well, didn't Jeff Bezos drive one to his penis rocket that he shot into the... Didn't he drive one out to that in his Texas hat? And
That is not a Texas hat, my friend. That is a different kind of hat.
Whatever, I'm just saying.
That was a hat for a guy who drives an electric pickup truck. That's what that hat was.
Exactly.
So a lot of these, like the big man said, a lot of these valuations have become a little more realistic, but we're still living in a world where some of these companies haven't crossed profitability yet, and they're going to the IPO route because I'm saying on their behalf, they're thinking profitability may never come. It could be 5 years away from now. But the investors of these companies, again, I'm a free market guy, okay, to the But what we're seeing is companies realizing that the frenzy to invest on the stock market, the FOMO, the fear of missing out, is so strong on the consumer investor side.
Mm-hmm.
And I, as a free market guy, do not blame these companies for going public when there is a frenzy to invest on the market, simply because I don't blame them for trying to make money, because that's their job.
Right. But there's a difference between, like Rivian, I believe, in my humble opinion, that they want to go public, especially at a valuation that size,
80 billion,
because they need that money to eventually become a profitable company. They need that influx, because you can only convince a certain number of venture capitalists to give you money before they start thinking. You can only go so many rounds before people stop giving you money, before they stop believing you, yada yada. And then what's your next offering? Your average Joe, right? Investor and this kind of stuff. So there's a difference between that and like a Stripe, for example, that has a framework of a company. They're profitable. They make money. It's a framework that's worked for all of our credit card processors in the world. And this is the part of investing that people don't take the time to learn, right? You got 375 IPOs in 2021, and there's going to be a percentage of them that are 100% garbage that nobody ever should invest in. And there's going to be some of them that make a lot of money, but in that everybody's trying to hit that home run. See, this is the part that scares me. And this is, Danny doesn't care about this part where I think about it, is because Danny believes in that free market. And if you're dumb enough, Danny believes that if you're dumb enough to invest in a dumb investment and you end up getting $0 and losing all your money, then that's on you. Too bad, so sad. Nobody gives a crap. Where it's
not that nobody gives a crap. It's that you learned a lesson, and that's all you're going to get for your money. And
I don't know that you learned a lesson.
That might be true, but the point is, some people will spend $3,000 going to a university to take one class and not learn anything. And if you take your $3,000 of capital and invest it and lose it, maybe you learn that you should be investing your money in things you understand and not in things you don't understand. And if you lose $3,000, suck it.
Investing, like a lot of other things, for some reason we go out and we learn from people we know instead of professionals, right? And I don't know why investing falls into that category like a lot of other things, but we go to that Bob that tells you all the time that he's making money day trading when Bob lives in a trailer or whatever. But then you think Bob's going to give you the advice to become a millionaire, right?
Bob lives in a manufactured home, and he would prefer that you don't call it a trailer. I'm sorry.
I apologize.
It's
a tiny house. But, like, for example, I'll give you a great example, and Danny's going to hate this example. One of these companies that wants to go IPO before the end of the year is a company called Stronghold Digital Mining, which is a crypto company that mines cryptocurrencies. So you're not investing in cryptocurrency. You're investing in a company that mines crypto company, hoping to be profitable one day with your investment to help them buy the mining equipment, space, blah, blah, blah. This is a company that this is what I say about people that don't understand something, right? Half the people that buy stock in this company, if it does go IPO, will think that they're investing in cryptocurrency when they're not at all. They are buying a company that is investing in cryptocurrency, that company will then in turn 100% benefit if that cryptocurrency, goes up or whatever, and this kind of stuff.
You're investing in crypto the slowest way possible if you're buying
absolutely, absolutely. But it will bill itself as an alternative way to invest in cryptocurrency, and they'll have a marketing video that says you're investing in the newest thing.
Super slick.
Oh yeah, and it'll be great, right? As far as they're concerned, that's the part where I get nervous about, people making videos and they're paid to make these videos. to sell something like that, and then the average person buys it thinking they're going to hit the next home run, the next GameStop, the next whatever, and then they get into it and they lose their shorts when institutional investors are investing in other things. And that's one of the first things I wish. Again, I'm going to say this and convey this out there. It's just my opinion. If you're investing in a stock, especially long term, I want to invest in something long term. One of the first things that you should look to find is if institutional investors, these are people that control other people's money, right? Large funds and stuff like that. Are institutional investors purchasing that stock?
Correct.
Because if you're investing someone else's money, you're way more leery about it than if you're just investing yours and risking yours. If institutional investors are staying away from it completely, I'm just saying.
Yeah, I mean, if it's because even in the GameStop situation, Michael Burry was signed Capital Management, which was a huge was an investor, and he's like, well, actually, if you look at their store location, if you because when we initially talked about GameStop, I hadn't done enough investigation to know that he was, and so when I later learned that, and he was talking about that Michael Burry had invested with his money, he was talking about why. Well, that kind of made sense. Like there was the fundamentals of the business actually worked, and each store location was very profitable. They had a back-end wholesale business. A lot of it made sense. So,
dude, institutional investors will pay millions of dollars to pay eggheads to figure out what's going on, right? To take advantage of every loophole of knowledge, of data, of crunching, of everything. And that's why I say they understand they're not right all the time.
No,
they're not.
Of course not.
Nobody is. However, they're going to be more right more often because of the access to information and that kind of stuff.
And listen, I think there's a lot of investors out there that are, they're watching The Big Short or whatever. They saw that movie and they went, geez, I want to be the guy. But we forget that the smallest player in that movie, which is based on true history, the smallest player in that movie, he was laughed out of the lobby of several firms, was playing with $20-something million, right? They were an investor of $20 million and was laughed out of the lobby of huge institutional investors. I was talking to someone and he's like, well, I wanted to get into day trading, but these companies, man, they won't let you make any money. I was like, dude, if you're playing with less than $250 million, they don't know that you exist. Okay. They don't, you're not even on their radar when you're dealing with people moving billions of dollars in assets around the table. They're not paying attention to someone like,
and to that, let me kind of draw this back in and we'll finish up the story. When I take IPOs, which is what we're talking about, we talked about SPACs a little bit, okay, which is over another 400 SPACs this year. So gnarly. 375 IPOs, over 400 SPACs, right, by the end of the year is what they're expecting. 700 and something between the two.
Going public,
their estimation for 2021, right? For companies that did not, as far as being publicly traded, were not publicly traded as of last year. We will see between the two $250 billion come from the consumer fund. $250 billion will have been raised in 2021 from the masses.
That's more money than Bezos and Gates and Musk have combined, I think, just about. I mean, it's getting close to that number.
$250 billion. That's the amount of money that is out there for the taking just in 2021.
Right.
And by the way, these are all people that think that they're going to make more money than that from that.
Of course. That's why they're doing it.
Right.
So, in closing, I just want to say this. I am going to be taking my deli public. It has 4 employees. Kidding. I'm referring to a story earlier this year of a deli that was public, and people were trying to ascertain why this thing was worth what it was. I think it was worth $10 million on paper. I think they had less than.
It was all about
200,000.
land, right? It was somewhere in New York or New Jersey or something like that,
Jersey.
where it was this old, right, land that was in the middle of what should be something else. It shouldn't be a deli. It should be a high rise. It should be a whatever. And their idea was, hey, let's leverage that to go IPO, right, or SPAC, and keep our deli, right, in this and not sell it and yada yada. Which I give them all the props in the world for creativity.
Right.
It didn't work out. They still closed. But that's pretty creative, right? I mean, and that wouldn't have been available to them 10 years ago, 20 years ago.
Yeah, it's called the Hometown Deli in New Jersey, and I was incorrect. The Hometown International had $100 million market cap at one point.
For a deli in New Jersey.
Which, even if what you're saying is true, which let's presume it is, there's no $100 million high rise in New Jersey, bro. There isn't. Okay.
Well, I'm just talking about some whatever they're wanting to do with it, right? You know what I'm saying?
But there's no land in New Jersey that's worth $100 million. I promise you.
It's Jersey, man. Don't they have a bunch of hipsters up there living there now?
No, they all went to Brooklyn by now. So no, that's going to be no.
That's going to be an no.
Yeah, that's okay.
All right. Well, all I'm saying is there's a lot of money out there, so folks, get yours.
$100 million for this deli.
Yeah.
All right. Well, before we jump into this next story, I want to tell you about Acre Gold. I want you to meet the new store of value, same as the old store of value. Acre Gold gives you the opportunity to invest in physical gold in 2.5 gram increments by buying a subscription, letting the money accrue, and then when you have enough money in that account, they send you a physical piece of gold. You can click the link down in our description and get going on your gold investment today.
Mm-hmm. Absolutely.
So this next story, oops, it's an oops. Gonna go, hey guys, oops. So there's a new piece of AI, and it's called Codex.
Yep.
And it can do its own programming. So here's why this is a bad idea. Have you ever seen a sci-fi movie?
See, this is where Danny kind of goes off the rails.
When yes.
You know, and you know, I've said this before, you know, Danny typically curates these stories, but he always, whether he curates them or not, he puts them on our list, right, to talk about for the day, and he names them, right? He gives it like a headline article. And this one, he says, "Still sure nothing could go wrong," at the top of the story, because the headline of the story was essentially, we've developed an AI that can program other AIs, right? It can program itself, which on the surface does sound super scary, right? Like right out of the Matrix. Wait a minute, we've developed a computer that can build other computers, right? Yeah.
So the reason, so let me just off the rip say this much. I have not an issue, but I think we're approaching a scenario like Idiocracy, where we're building things that are so smart that it will mitigate any sort of future intellectual investment into those fields. So we're building computer systems and AI, that are so smart that they can build their own AI. Here's the problem with that. Eventually, there's not going to be a need for a person who can write AI code, right? And when that happens, the AI, I'm just saying we need to continue to invest in those industries, because eventually because somebody needs to be able to tell this thing what to not do.
So you're okay, because I love the movie Idiocracy. I get why it was made. You should. It's a great movie. It's a great movie. And it was made so long ago, even before the internet is what it is today, and cell phones are what they are today. So it was it comes back up from time to time, because if you haven't seen the movie, go watch the movie. It's great. It's a great representation of what Danny's talking about, in that, for example, we live in the most connected age ever. We have access as human beings across the globe to more information that we have in the history of existence. And the generation that is currently in high school and graduating college are the least educated we've ever had since we've started educating them. And so that, and some people question, some people, their answer is they have access to Google. Why do they need to learn it? They have access to a website that knows how to do it. So why do they need to learn it?
When you and I were in school, our math teachers probably said these words verbatim. You're not always going to have your calculator with you. Well, guess what, Mrs. McGrath? I got a freaking calculator.
Yeah, I was not allowed calculators, right? Like calculators were not allowed on tests. Calculators were not allowed on, but that is a question, right? Can you be knowing human beings, and that in nature we are lazy, good for nothing, whatever's. If you build a program that does something for you, will you then take the time? Will some people still take the time to learn that? Now, in this case, Codex, look, they built Codex. The company that built Codex built it to do exactly what Danny says. They built it to program other AIs, to program, period. And what they figured out through the development of it, much like a lot of companies out there that try to do this, at least so far with today's technology, they built a really useful tool, right? They built a really useful tool that will allow other programmers, actual programmers out there, to do things faster, quicker, whatever. Because if you have a programming buddy, if you're not a programmer and you're watching the show, or you've got a programming buddy, you've heard a programmer, much like a mechanic in the old days, complain about working on someone else's car. Programmers are much the same way, in that there's not one way to do it. You can, if I come up to you and say, hey, I want to build a new slot machine, 15 programmers may have 15 different ways of accomplishing that slot machine, and they all work, right? As far as what you see, they all work, but the back end being very different.
And I, as someone who, dabbles in graphic design and web development, I own a marketing company. I can tell you this much: when I have to pick up and solve someone else's website, or somebody's like, hey, I want an update, but I don't. The last guy who built it went back to graduate school and as a teacher can't do it anymore. That's a real situation, but it's always a pain in my neck. I'm like, why did they do it this way, right? And I'm not. There's a scene from the TV show Silicon Valley where the main character gets into an argument with his girlfriend because she uses tabs instead of spaces or something like that. This entirely innocuous argument, there's nothing there. There's no point. You achieve the same thing, but how you get there is a little different. So this AI, which is brilliant, OpenAI developed this Codex, the program called Codex. It's brilliant. It's going to change how they develop a lot of different things.
Because you could develop a framework. Like in that scenario, Codex could help you build a framework where then that person, because Codex also, it has a voice activation part of it, which in itself is scary. You know what I mean? Say, okay, bring up, in this case, building a slot machine framework, and then you're able to tweak it so that you build a framework for, this is how speed expediting products works, is you build a framework that then you can then customize and design. Now, what I found most interesting about this story is if you are ever a programmer or a technical guy or whatever, you know that when you interview for a job, especially if you're a contractor and they're bringing you in to do a job, you know that part of the interview process is they will walk in and they're famous for somebody that's interviewing to put something up on a whiteboard, right? Like, I want you to program this. I want you to simple code this, or I want you to fill in this blank or whatever, right? And then you as the interviewer have to go up there and kind of solve the problem or fix the problem or decode, whatever it may be. It's all over programming technology. The guy that tried this by the name is Tom Smith. He owns a small startup that's working on whatever. They gave it to Tom Smith to work on. He put it through his standard interview process of, hey, solve this problem, do this task, whatever. The computer system did them all. Not only did them all perfectly, but did them all in minutes instead of hours or whatever it normally takes an interview or whatever.
10 minutes.
But after playing with it for a while, he came to the same conclusion that obviously it's a good tool. It doesn't always do what you want it. It's one of those, right? Look, this is the same framework, guys, that when you're texting and there's an algorithm, an AI that says, hey, your next word is probably this.
Predictive
and
text.
It's right 75% of the time. This is a very similar technology in that it's going to be right. Actually, the article states that when it was asked to do tasks that it wasn't familiar with, it was right about 37% of the time.
So I'm no Luddite, but I do have predictive text turned off on my phone. I have predictive text turned off on all my emails because it's simple. There's for a lot of reasons, and this is the issue I wanted to raise with the story, which is if we create obsolescence for certain, if we use computer learning, neural networks, and AI like Codex, if we use, and this is more of a philosophical question than it is a business one, but it applies to the industry. If we create those systems that ultimately make it obsolete to have a physical human programmer, correct? We create a long-term trajectory where there are no programmers.
Well, but I don't know. You realize how much further we have to get before there. Right now, it's still going to be maintained because a program like this, the way it works,
I don't know.
A program like this, the way it works, and this is, again, trying not to get too technical for the people out there, is it learns by what other people have done. And then it aggregates that data and comes out an average, right? And that average becomes its rule, right? So if I'm asked, again, I'm going back to the slot machine, if I asked it to program a framework of a slot machine, it's going to reach out to the World Wide Web, all the data it has access to. It's going to pull in all of that information, and then it's going to spit out what it thinks is the aggregate of that information, which could be good, bad, not work, does work, depending on the amount of information that it has access to and how that information then gets condensed and spit out, right? So it's not like it's deciding, it's not a programmer that a programmer, right? A programmer has all of its previous mistakes. It has all of his or her previous knowledge, right? All of that kind of stuff. And I like to bring up slot machines because slot machines are one of those industries that people don't know that, hey, guess what? They all have to be programmed nowadays. They don't run on keys like they used to machines. They're all programmed in nowadays. And guess what? None of these people that make these slot machines talk to each other. They both hire individual programmers to do these kind of things. And what happens is it's also an industry that if you're really good at it, you make a crap ton of money because everybody out there that makes slot machines wants you to come do their slot machines, right? So because it's a well-kept secret, like how you're doing it, how you're building it is whatever. So Codex in the current world of technology and for the foreseeable future will have to be managed by someone with that kind of experience, with that kind of knowledge, because it's aggregating, it's condensing, it's the difference between replicating the Mona Lisa and creating the Mona Lisa.
Fair enough. Now, like this, that's an adequate and more than fair explanation here. But again, I'm just asking the 15-year philosophical question, which is, if we automate it, aren't we just? And I don't care about putting people out of work. It's the longer-term question of, are we creating a future we cannot control?
You're right. That is a philosophical question that I think we always have to keep in mind. But I think that's where we differ on perspectives.
Yeah, I'm just saying.
I believe in the Gene Roddenberry Star Trek future, where technology, even though it becomes artificial intelligence and all that, that we as human beings, it allows us to aspire to higher things that we continue to learn and grow. Danny thinks that at the point, Idiocracy, that at the point that technology takes over, we all become idiots because we're all lazy morons and we only do things we have to do.
Or the Wall-E future, if you're unfamiliar with the Pixar movie, or the I'm trying to think of the Mad Max future. These are all futures I see, right? Nonetheless, listen, fascinating that it exists to me, right? It's fascinating that this exists. And it's just one more reason I regret not being more of a nerd in high school and caring about programming. When I think it's a
step in an inevitable future.
Yeah. We got Elon Musk building flipping robots, and we got this guy writing code that writes code. I'm sure everything's going to be just fine, big man. There's nothing to be concerned about.
Nothing to see here. Move along.
Nothing to see here. That's correct. All right. Before we jump into our next story, fascinating story, by the way, I want to tell you about Big Man Gear. Big Man Gear is this guy's t-shirt company. You can go to bigmangear.com. It'll take you to the Amazon Prime store. It's merch by Amazon. It's the big man's idea of funny merch, right?
Yeah. Like You Can't Abduct Big is one of my best-selling shirts. It's got an alien dragging a fat man. You can't abduct Big. You just can't do it.
Listen, I was on a weight loss plan, but it was my insurance company that said, you're actually a huge target for kidnapping. And they said, we'd prefer if you didn't do that.
Yeah, you can't. So, it's much more difficult to abduct a bigger man. That's all.
That's correct. Try to put me in the back of a conversion van that I also happen to drive and live in.
Yes, try to drag you into a panel van. It's just not going to work. That's right.
So you can go to bigmangear.com. Link is always in the description. You go to Market Explainer. You can go see all of our lovely sponsors. This next story, and I'm just, listen, everything that's going on in our world today, I just want to say I'm glad that the feds have the opportunity to take a look at the claim that the McDonald's ice cream machines are always busted.
Yes, the article is the Federal Trade Commission has launched an investigation into the McDonald's ice cream machines and why they're down all the time. Okay, this is one of those stories where, okay, I agree with Danny. On the surface, it sounds really dumb. Does the FTC not have better things to do? But it's really not about McDonald's
right now
and their ice cream machines.
Right now, there is a 93-year-old woman who's getting her life savings scammed away from her by a crypto Ponzi scheme.
Right.
The Federal Trade Commission is worried about the ice cream. What actually like the ice cream?
All right.
Chocolate chip. I got chocolate chip.
Before we get to what the actual part of this story that's relevant is, what I find great is there's a website set up in most metropolitan areas where you can go to this website and find out whether your local McDonald's machine is up and running or not.
Right.
The name of that online tool is McBroken.com.
Oh, man.
So if you want to know before you leave your house, hey, I'm craving a whatever, McFlurry, whatever it is, and you don't want to waste time going to the McDonald's just for it to be broken, you can go to McBroken.com and find out whether your local McDonald's is open.
Yeah,
but that's not the real story. I mean, that's
it's like 6 months ago, I forget the guy's name, it's Johnny something. He had like a mini documentary where he just investigated this phenomenon of why is the McDonald's ice cream machine always broken?
Right.
And the kind of conclusion that he came to, and this is really a rapid summation, but the conclusion that he came to is basically that the maker of the ice cream machines that are used in McDonald's has an agreement with McDonald's corporate, not the franchisees, that forces the franchisees into buying one specific model of ice cream machine, which they in turn are the only ones who are allowed to service. And they create all these different scenarios where if it's 1 or 2% off, the machine just goes into a service mode, and the employees, which, hey, listen, we're talking about people who are making less than $8 an hour in most situations because they're making minimum wage. I don't expect these people to be technicians of ice cream machines. I don't expect them to be technicians of anything.
No, well, you're talking about a machine that obviously has a cleaning cycle, right? That they're supposed to run once a day. And that apparently really is with this particular machine is the problem, is it goes through a cleaning cycle once every 24 hours. If it gets stuck in that cleaning cycle for any reason whatsoever, it goes into, as you say, service mode, which then this contracting company, by contract, they can only call this one company because that's the way it's laid out. Here's the real problem. The real problem is these kind of contracts. And by the way, it's not just McDonald's. I actually had a buddy of mine that owned batting cages. And this company that he initially bought his pitching machines from had a very similar setup contract where he got them at a huge, when in comparison to other pitching machines, what looked like a discount. And I don't care if I have to sign a contract where they also have to service them or whatever. What he didn't know at that time, that there was one mechanic for those machines in the entire state of Texas.
Well,
so anybody that's using those machines, pitching machines, in the entire state is sharing one guy. So if your pitching machine breaks down, which they do, brand new or whatever, they do, you have to wait until that one guy is in your area, in your town, in your whatever, when it's a priority. So it could be months. Right? And that's what these kind of contracts, because look, it's just a machine. There's all kinds of people out there that can work on pitching machines, that can work on, in this case, ice cream machines and whatever. It's just a machine, but it's per contract, right? So they're making their money off of the broken machines instead of the upfront you paying for the machines, right?
Correct. And the Johnny Harris is the guy whose video I'm talking about. If I remember, I'll include that in the description, a link to it. But what they kind of figured out, or he kind of figured out, was the company that owns the ice cream maker is publicly traded. And if you go through some of their documents, they talk about how they developed a reoccurring revenue model, because selling the machine one time, let's just throw out a number. I don't know what a machine costs. Let's say it's 15 grand, right? And let's say, but you sell the machine to McDonald's once for $15,000. They don't need another one from you for forever. 5 to 10 years. Let's say it's 5 to 10 years.
But they sell a maintenance plan. And that's where they're making their recurring money. They
don't sell a maintenance plan. They force you into a situation where they cut a deal with McDonald's, where the franchisees, so other franchises, Chick-fil-A, Burger King, they use machines from the same company, but their franchises cut a different deal with the company. So their franchisees don't have this ridiculous situation where, and there's these kind of funny memes that go around of the different billboards or signs that the small town restaurants, McDonald's in one small town put up a sign that says, "We sell chicken sandwiches on Sunday," and the Chick-fil-A in that town put up a sign that says, "Our ice cream machine works all the time."
Which I don't want to interrupt the billboard gangster market, you know what I mean, going after each other. I don't want to interrupt that. However, what this has brought up is essentially a slew of lawsuits around what they're calling right to repair, right?
Yes.
Right to repair it.
Which is a much larger conversation in the growing technology. The more and more technology becomes a part of our life, the more and more we're stuck in situations where Apple doesn't want you tinkering with your computer. Right? And there's two reasons. Part of it is they want the experience of owning an Apple machine to be so amazing that they don't want you ever having to think, "I'll crank this thing open and put some new RAM in it." But also revenue for them, right? Tesla's in the same boat. People are having
automotive industry has been trying to move to this for years, where they have been making cars more and more difficult to work on for your average everyday mechanic by putting more and more technology into them and things like this nature that your average mechanic doesn't know how to do, can't do, that they're not certified to do. They tried to do it with warranties years ago by saying if you have an outside mechanic work on it, we're not going to warranty it after that. And then that led to lawsuits, and they backed off on that and that kind of stuff. This right to work, or right to repair thing is what it boils down to is, do you as an individual, when you purchase something, whether it be a computer, a car, or an ice cream machine, do you have the right, now that you own it, to turn around and have someone else repair it? Right? Do you have that right? Because if you have that right, then these contracts that say that you have to go back to me to repair it are null and void. Right? When you get into rights, what are your rights as an owner of something, right?
It's a complicated concept too, because I know guys who own, I don't know, but I'm saying there's an issue with people who own certain kinds of tractors and farm equipment.
Right.
Where they're saying, now I have to wait for the John Deere guy to come out here to fix my whatever machine. But hey, in the meantime, I don't control how crops grow. My crops are ready for.
That was another lawsuit under this same umbrella. Do you have a right to work on the tractor that you bought and purchased? You know, when there's not enough. Because there's not a problem when there's enough technicians, right? Correct. If you had a technician on every other block or whatever, but what you were seeing, like in the farming industry, is they weren't able to get their crops out of the ground because they're waiting months for a tractor guy.
Yeah. And so it has created a cottage industry of a two-pronged cottage industry where there's guys who are like, hey, we'll pull out all of this whatever management on your thing, and we'll stick an open source system on your tractor so that whenever you need help, you can just go download it over the air, whatever. You don't have to always have a certified John Deere guy or whatever company it is coming out there. And it's created a cottage industry of people finding older farm equipment that's just right before, like it's right prior to. So it's technologically advanced enough, but it's not like, it's a backhoe.
It still works.
You got
Yeah, but look, and guess what? It's not the mechanic's fault either, because guess what? Like the credit card industry, they're beating up both sides. They're beating that guy up on his rates to get the contract so that he always has a job with them, right? Going around, right? They're doing that to him or her, right? And charging you. So they're beating both sides up, and that's where really this story, it's really not about ice cream machines. It's about this right to repair is what it's really about.
And it's about manufacturers looking to capture long-term revenue from selling a product, right? You sold a product and you want long-term revenue, which they're trying to move into what I would say is product as a service, right? Which is, you're seeing car companies doing this now too, where Volvo offers a deal where you just pay a flat rate and, you want this Volvo this month, a different Volvo next month. You don't own a car, you lease from Volvo. And they, and it sounds good on the surface of it, but the long-term ramifications could also be that, when you want your car or whatever, there's somebody says you're not allowed to have it.
Well, one of two things is, to kind of wrap this up, one of two things are going to ultimately happen. Either the government or the judicial system between all these lawsuits is going to decide that you have a right to repair, and it's going to make all these contracts null and void, or consumerism will work the way it's supposed to, like Danny says, in a free market, where people will find, enough people will say, well, screw you, I'm not going with you as a company then, that those companies will become obsolete. One of those two are going to happen. Ultimately, everything should be able to be worked on by people that own them, wrong, or otherwise. It's just the way it's going to work out.
So there's a YouTube channel called Rich Rebuilds, and he's a Tesla tuner mechanic guy. And one of the issues he always has is Tesla doesn't want to sell him parts to fix their cars.
Right.
They want him to go to Tesla and have them fix it. And guess what? I've come out of the Fast and Furious era of automotive customization. And the one thing that pisses me off about the electric future that I'm seeing is, hey, I want to customize my car, dude. Right. I want to, I want to lower it. I want to lift it. I want to do whatever it is I want to do with it. Once it's mine, and that used to be the American spirit of owning anything, was that Harley Davidson's a great example. Like,
absolutely.
You go to Harley, and going to Harley is like buying a Camaro in the 60s. Right? You can, you bought a Camaro in the 60s, you can put whatever thing you want on it.
You can add to, you can take away, you can, and the aftermarket availability of things that you can do that fit the Harley design and whatever and are almost infinite, right?
And absolutely. They want you to do it. They want you to customize their thing.
I think this is like everything else. There's an ebb and flow to everything that happens. Right. We've gone too far with no, it's too custom to work on, it's too whatever. And now that pendulum will swing the other way now, where it'll become way more automatic. I think you're going to see it in the electric car market. I think you are going to see aftermarket kind of modifications or whatever. And I think as electric cars become more and more popular, again, I think that's what causes it, is people are going, well, I'm not buying that Tesla if I can't also do this. That's not going to avoid my warranty. That's not going to, you know what I mean? Right. Because right now, that's what Tesla's about, right? Like, there are companies out there I've seen stuff like pop-up campers that will attach to these new Tesla SUVs and stuff like that. Right. And they basically, no, you add anything to this Tesla that's not by Tesla, it voids your warranty and we're not going to work on it, right? Or we're not going to do anything to it. But they can right now, right? That's always business, is what can you get away with until you can't. And I think popularity is what controls that. And I think that's what this is going to fall under. Yeah, and I think that, to that end, when it comes to the kind of electric car thing, Ford is going to be selling a crate engine that's electric. Right. And I think that's what's going to, at least in that one vein, in that one vertical for electric cars, I think what's going to change it is the traditional car companies going more electric, realizing, because they already have a system of like, all right, we have certified parts, and then, if you go to an ASE certified mechanic, we have to honor the warranty because you use the correct parts, you went to a certified mechanic, blah, blah, blah. Right. Nonetheless, this story is, again, it's not just about the ice cream machines at McDonald's, but now you can go to McBroken.com. We've been informed, right? And what the story's really about, right? Which is the right to repair. Correct. Totally. Hey, before we move on to our next story, our last one, I want to tell you about something very important. That is workathomstuff.com. As we all know, the events of 2020 have permanently changed the working landscape. And many of you are just coming to the realization or conclusion, like a lot of people in my family and a lot of my friends, that they're never going back to their office. Nope. And for that reason, you're understanding you're going to have to build a little office in your house. And for that, we have workathomstuff.com. It's all the stuff you need to work at home. All right, this last story, another oops. Oops. Why'd you do that? Why is this an oops? I actually like this one. So, my good friend Mark Zuckerberg, over at the facelook.org. Yes, the Facebooks. Yeah, okay. So, they are partnering with Ray-Ban. They are going to be debuting smart sunglasses. And I just want to say, this has been a huge business for Google and Snapchat. Both of these those competitors made billions of dollars selling smart glasses. No, they didn't. Oh, they didn't? No. Well, they made money, but they were all flops. Money. They all lost money. That's what I'm saying. No, they made money in that they sold some. Yeah, sure. But they were flops, right? Old flops. But there are differences. There's difference. I think Google came out with Google Glasses too soon. It just, the technology was not there yet, right? Okay. So and they tried to make it a thing on its own, Where
And I agree with
Facebook
that.
is doing something different in that if you really read this article,
Yeah.
it's really not as smart glasses like you think of Google. It's
No, I
really
agree.
upgraded sunglasses. It's
Yes.
sunglasses that also are a Bluetooth headset. It's sunglasses that also have a camera in them. It's sunglasses that have a storage device that links up to your phone, right? That Bluetooth links up to your phone. These are all things that you are currently wearing, right? AirPods, right? All of this stuff, and they're just putting them in Ray-Bans. That's it.
Yeah, and so listen, out of all of this is the third smart glasses project, or smart is in quotes, project we've seen from a huge company. This is the most reasonable one. The Snapchat specs, or I think they were called Snap specs or something like that, awful garbage.
Sure.
The Google Glass, which again didn't actually have a glass and had like it
I didn't understand the Google Glasses thing. I get what they thought eventually, but we weren't there yet.
Right. So Google Glass was it was a 90s era sci-fi movie concoction. It wasn't from its own era. So there's that. So so I actually saw a video, which if I can find it again, I'll link it again. But it's semi creepy because they have two cameras. I think there's two cameras in the glasses. These look like regular Ray-Bans.
Right, they're hidden. Now, I do think from a safety feature, they are integrating a light on the side of the glasses that will tell people when it's recording.
Yeah, but if you see that light, it doesn't mean it's not much.
I'm just saying that they've taken into account I don't want to say security, but just this. Okay, we understand that this is something that could be taken advantage of right off the bat. Yes. So we're going to do at least this one little thing to make sure that there's a way to protect. Probably it's about protecting themselves in lawsuits,
of course,
right? Because you automatically say, okay, here's a pair of sunglasses that look like sunglasses, and you can record all day on them, right? Yeah. Everybody's mind is going to go where it's going to go, and they don't want it taken advantage of. So there's going to be hey, this is recording, just like on your phone or whatever else.
Right.
Look, that's all this is. I mean, the cameras are not great because they are meant to be tiny and not really,
Listen, they're 5 megapixels, which if you have your phone and you turn on the selfie camera, probably 5 megapixels. I mean,
it's good enough for what they're considering a Facebook picture, a quick video, a quick recording, things that they think people should be using this for. Right? Yeah. And that kind of stuff, as far as something that's kind of out of sight and not your cell phone and that kind of thing. But look, to me, this makes sense, right? And guess what? The starting price is $299, which there are sunglasses that are more expensive than that. Regular sunglasses that do nothing but block out the sun.
Yeah, I know, like Oakley's. And I remember when all my friends got into Oakley's and I bought fake Oakley's.
Yeah.
And they bought $400 Oakley's and I had fake Oakley's that were like $12 I bought in Canal Street.
2 for $20. Yeah, exactly. You know what I mean?
I don't care. But I'm just saying that, I've seen, so that, Ray-Ban is owned by EssilorLuxottica, which is the world's largest manufacturer. If you ever see a company like, hey, I got some Jeep sunglasses, this company made them, right? They are the conglomerate of conglomerates when it comes to sunglasses. They have cornered the market. They're the only player. But this is, like I said, the best execution of the quote-unquote smart glasses I've seen. But that light that you're talking about on the corner of the glasses, I'm never going to look at that. Now, listen, anytime I see somebody wearing Ray-Ban looking sunglasses, the first thing I'm looking for is this freaking light.
Well, but that's what I'm saying. Now, it seems to be from the article, they've given you essentially what you're already carrying, which is good business, by the way, right? Everybody has Bluetooth headphones. Yeah. Everybody has a camera. So they seem to giving you all the things that you're carrying around anyway, which is typically a good business model. If I can combine things that everybody are using, right? And then you include the sunglasses into that part.
Right.
And then they've given you just enough of the new technology, basically by giving you 2 cameras. You can add certain effects to photos and videos and stuff like that. And I think that's where Google did something which is bad business.
Right.
We all know that cell phones have been around in the military and the whatever for a lot longer than consumers had them, for like 30 years previous. Yeah. And we as a society had to step into it. You had to step into pagers, and then pagers to flip phones, and then flip phones to, you had to stair step the average consumer. I think that's where Google messed up, was they tried to jump that stair step. When to me, this feels like one of those logical steps.
Yes.
Give people that wear sunglasses, which everybody does, give them those sunglasses that are also a headset, which is probably where this will get used the most. Right? I get to wear sunglasses while I'm running that also are my AirPods or whatever. Right?
Yeah, and listen, of course, don't be concerned that Facebook and Amazon and Google are already listening to all of your conversations. Now they just want to see what you're seeing. I wouldn't be worried about that at all. No problem.
Yeah, that they have a camera on your face that can literally capture everything you're doing all the time. Right. And that is Danny's conspiracy theory hat that he just, puts on just like this right on the top, his tinfoil hat.
When we all look back on this podcast 10 years from now from the FEMA camps,
get out of here.
I told you so.
I told you so. Look, I guess I'm in the category of, when it comes to that kind of stuff, even this, like, to me, for $300, this seems like
amazing. It's amazing.
A cool investment, right? Yes. Well, I shouldn't say investment, just a cool purchase, right? Like, if this were available to me today, like, this would be a pretty cool thing. Now, am I going out and buying them for my entire family and that? No, but to have them and be like, hey, this is kind of cool. It's a cool new toy, whatever. I would be curious to see, because what I don't like about products like this is typically, because it's a combined product, the product is not as good as the individual parts until down the road.
Right. Because until very recently, until, like, I would say the last 3 years, buying a point and shoot camera, you were going to get a lot more features out of your point and shoot camera than you were ever going to get out of a phone camera. Now they've integrated AI into a lot of phone cameras, and they're amazing. I just want to point out my favorite part of the story, which is these are called the Ray-Ban Stories sunglasses. So Facebook basically knocked off the concept of stories, which they integrated into Instagram from Snapchat. And now they've taken the concept of making glasses with cameras in them from Snapchat. So I just want to celebrate the good people at Facebook for dancing on the grave of an app, which basically they stole all the ideas.
For their intuitive ideas, innovation, and absolutely. It bothers me a little bit that this is actually being put out by Facebook. Like, it would be much more, to me, it would be a bigger thing if Facebook left their name off of it, even though it was a Facebook Ray-Ban partnership. If they left their name out of it completely, and these are just Ray-Ban, call them something, technology glasses, or, you know what I mean? Like some cool name.
That's super cool, bro.
No, I'm just saying Ray-Ban, the next generation, or something like that. That is just...
Yeah, the next generation,
Eat it, okay? Eat it. You know what I'm saying? But I'm saying by attaching their name to it, people like me, because I'm not a big fan of Facebook and just in general. So, and I would never use these glasses, even if I own them, to post pictures and videos to Facebook. So it would be a smarter business move to me to not attach it to a company like that, and just be a smart technology glass. Sunglasses.
And my belief is that the reason that Ray-Ban probably saw the thing that happened to smartwatches and said, none of the big players in smartwatches are watchmakers. It's not a watch company, right? It's all the technology companies. And I'm a watch collector, and I'll tell you, the watch companies aren't worried, right?
No.
But they're not. But the sunglasses, when it comes to glasses, Ray-Ban was probably thinking, We want to be in this business, right?
Well, I think Ray-Ban was probably thinking, not only do we be in the business, but we want to give Ray-Ban another excuse to be Ray-Ban,
Yes.
right? I think I think like you said earlier, there was a time and a place where Ray-Bans, Oakleys, these big name sunglasses were all about it. Like there were people, large groups of people that were all about those expensive, very specific looking glasses, and I think that's kind of waned a lot in the next generation. Right.
And I think that there's a lot of companies that are going to be coming out now that are the kind of direct-to-consumer play, that kind of crater, and they're not going to steal from Ray-Ban, but what they're going to do is they're just going to create a situation where the average guy who went and bought Ray-Bans at some point in time in his life never gets to that point. But now they can introduce themselves to that client or to that consumer
in this way.
Correct.
Yes, I think that's the play, because I think they recognize as a brand, like you said, the next generation, the generation after that, are not going to go out and buy $400 and $500 Ray-Bans or $400 and $500 Oakleys. Right. So, but they will if it's a smart sunglass, if it's a speaker and a camera and it fits into their technology need. That's the step for that generation, not, hey, these are just the same glasses we've had for 20 years.
I will buy a pair of these sunglasses as soon as they can get Tinder on them.
Of course you will, because you'd be one of those weird, creepy people that watch weird things in weird places.
I'm not creepy. Hold on.
Okay. All right, I'm just saying. All right. You should not be able to watch that on the subway. That's all I'm saying. All right.
When have I ever been on that subway in my life?
I have. All right. I think that's all for us, Danny. Do you have some kind of closing knowledge for us today?
Of course. I hear people talking a lot about giving back. And I just wanted you to know, if you stop taking so much, you won't have to give back so frequently.
Spoken like a true anarchist right there.
I know. It's so true.
We'll see you next time, folks.
Bye.